On today's episode of the Real Estate Tax series, I'm going to discuss the 6 important expenses that you should be deducting on your real estate tax return. If you are new to me, I am Taiwo Agbaje. I am a tax strategist. I'm also a certified public accountant, and I work with real estate investors, private practice medical doctors, and physicians and home care agency owners to help them strategically and legally save on taxes so that they can grow their wealth. Now, there are certain expenses that you should have as a real estate investor on your tax return. But before I go right in, I want to talk about the tax forms that you will need in order to properly report your tax return. If your properties are owned under your name, you are going to prepare a Schedule E on your 1040 to report your real estate transactions. If your properties are owned under a single member LLC, you're also going to utilize a Schedule E to report the real estate transactions, income, and expenses for the year. However, if your properties are owned under a multi-member LLC, then you will need to prepare a Form 1065 and also Schedule 8825. You're going to need a Form 1065 and Form 8825 to report your real estate transactions. Right now, having said that, the key expenses that you should be looking out for are expenses that are also deductible, whether you own a commercial property or you own a multi-family property or you own a single family home and or you own short-term rentals. So the first one is depreciation. This is the most important expense as a real estate investor, especially if you conducted a cost segregation study for the year. And the second one is the property taxes. We all pay property taxes on our properties. Your residential property and your investment properties are subject to property taxes. However, if you don't know how to obtain how much you paid, you can go on your county assessor's website. You will be able to do a search of your property and obtain the amount that you paid during the year. So that's the second one. The third one is the property insurance. So if we all pay insurance or insurance expenses on our properties, so you should also be deducting your insurance expense as well. The fourth one is the mortgage interest. If you own a mortgage on your property, you will be able to deduct the mortgage interest. Now, what is deductible is the mortgage interest, not the entire mortgage payment. You will have to exclude the principal portion of the payment to determine the actual mortgage interest. You will also be receiving a Form 1098 at the end of the year that will report the total mortgage interest paid during the year. Then the fifth one is repairs and maintenance. If you incurred expenses during the year to fix certain aspects of your property or certain part of your property, you can deduct those expenses at the end of the year when you're filing your taxes. And then the sixth one is property management expenses. If you have outsourced the management of your investment properties to a property management company, you can deduct the property management expenses. If you are looking for a real estate tax professional, reach out to us. We will be happy to take care of your real estate tax needs. And if you have any questions, let us know. We will be happy to help you with that. Thank you. I'll see you next time.